Hi, this is Ian Coleman from PIA First. It's Sunday, 22nd of March. Looking at dollar yen medium term forecast. First chart that we've got in front of us is the monthly chart. Now we're at quite a critical level around this sort of 120, 121, the figure area. If we zoom back or pull this chart back, we can see that this has been quite pivotal. Okay, going back to 1985, 1988, even around this area in 2003, it was support, then resistance again, did spike through. So it's obviously been weakened, this area, but it is extremely relevant. And in fact, if we actually pull the chart in a little bit more, we can see that this moved down from 263 all the way down to the 75s. It's a 23.6% pullback. So it is the first real sort of relevant resistance level for dollar yen, and that's obviously why we've seen some consolidation now for 4 months. But we can just see that 22nd of March we are spiking through this area for the second time in 4 months. If we get a move to the downside, then obviously we'll be looking at a very large head and shoulders formation with a possible sort of right shoulder drifting over the next sort of 2 years to form. Obviously that's far too big a time frame for us. Breaking down into weeklies, and again there's a few signs. We've got a 261.8% Fibonacci level, but that's not located until 124.11. However, again breaking down and just using a really basic measuring tool, the ABCD formation. So we're not a million miles off a target level, which is 122.42 daily, and this is where the picture becomes a little bit murky. We've had some, last 2 days of last week were inside soldiers, so that really shows indecision. However, strong down day, or reasonably strong down day on Friday. We look to be in the corrective channel formation. We've got some bearish divergence on the daily chart, and we've just touched the 50. Now what we'd like is obviously a breakout of this channel formation to at least start the move to the downside, and then obviously around 116 the figure is going to be very relevant, because it's going to need to break and hold below there. Otherwise we're just going to be in a very large channel formation. You can see here obviously the previous high, the spike and the move lower. The only slight concern we've got with this sort of bearish outlook is the higher lows. Okay, some will be seeing this whole sort of consolidation from the end of last year up until now as an ascending triangle formation. But in the short term, even breaking down into hourly charts, a 61.8% pullback level of 120, it was 120.96, was rejected on Friday. We saw a bearish outside bar on the 4-hour chart. Okay, and then we had that quite aggressive move lower through Friday afternoon. No real sign that that immediate sell-off is going to falter. We're near a correction count on the hourly chart, so we might see a little bit of a pullback in the Far Eastern session Sunday night, Monday morning, but we're expecting this channel formation, okay, and the base of this channel formation around sort of 119.20 to be the focus early on this week. Okay, thanks very much. Thanks for listening, and I'll speak to you again soon.